Hey everybody, hope everyone's doing well. This is a brief recap of the Emini 5-minute chart for Friday, January 10th, 2025. On the top left of my screen, the green and red chart, that is the weekly chart, and here's last week's bar. We can see it's a buy reversal bar, so the bar sold off and rallied above its midpoint. It's a weak buy signal. It's in a tight trading range. It has a bare body, lots of overlapping bars, overlapping the prior two bars heavily. So tight trading range, price action. We had a bear breakout, deep pullback, testing a breakout point, getting a second leg down. And here, if this is a trading range, then up here is probably high in the range, and down here is low in the range. So I thought if we traded above last week's high, we'd probably find sellers above. And that's what we got this week. We traded above the high and found sellers. So bad stop order buy, good limit order sell. The daily chart, this is the continuous contract chart, the Globex. It includes the Globex session. So we see less gaps, so the bars don't necessarily look the same as the day-only session chart. But what we had was big up, big down, big confusion. It's a trading range. We rallied, testing a breakout point. We found sellers, bear breakout bar strong enough for a second leg, and then a pause bar. Probably a minor reversal. Might be sellers above the bar, maybe even sellers on the close of the bar. At a minimum, probably going to test the lows down here. And today, on the 5-minute, we had a gap down, so trading range day on Wednesday. And here's the prior day's low. So today we gap down, fairly big gap, more than 0.5%, and then a follow-through bar on bar 1. But it's a weak bear bar. Big tail below, closing above its midpoint, but really not a good buy signal bar, so probably always in short on the close of bar 1. If not bar 1, then by the close of bar 2. Now bars 1 and 2 are 2 legs down, but it's minor. We sold off on 1, pulled back, sold off on 2. So we might get a minor reversal, but the gap down combined with bars 1 and 2 probably strong enough for sellers above and a second leg down. So bar 3, a good looking bull bar. It's a bull reversal bar closing on its high, but the context is bad. You can think about the gap down as a bear breakout. So simply one big bear bar. So you can think of this as a 3 or 4 bar bear breakout. So is bar 3 going to reverse all of this? Probably not. As good as the bar looks, it's more of a sell to close bar or sell above. Now, because it's on the open, 50% of breakouts on the open, no matter how strong they look, are going to reverse. So bears, they might respect bar 3, possible opening reversal. So some traders might exit shorts above bar 3 and look to sell again if we remain always in short. But other traders, they'll see this as a big breakout, minor reversal. The first reversal attempt will probably fail, and traders will expect sellers above. And that's what we got on 4. Outside down on 4, tight bear channel. So we have a pullback now, but a very brief pullback. Sell climax, pause, sell climax, another pause, but big enough down that we may get at least one more sell climax before there's any correction. But big breakout bar 4, but it's an outside bar, trading range bar, overlapping the prior bar, and then bad follow-through. The follow-through bar overlaps the breakout bar by maybe 80%. So this is more of a trading range bar. Yes, we sold off on 4, but then if you sold the close of 4, and this is your entry bar, you might be fairly disappointed. You were hoping for another bar like bar 4 down here, but instead we got bar 5. It's a doji bar. It's a weak follow-through bar. It's minimum follow-through. We tested the bar 3 low. That was a breakout point. Traders who bought the bar 3 low, trapped on 4, had a chance to exit at break even during bar 5, and that's going to contribute to some of the fuel that makes the market go lower. You have bulls who got trapped and they're looking to sell out of longs. So you have bulls selling, bears always selling, and that leads to lower prices. Bulls not making money buying here. We have to go lower to find buyers. 6, inside bull bar. But because it's such a small bar and it's an inside bars are trading range bars. So with bar 6, probably buyers below and sellers above, but in this context, probably better to look to trade in the direction of the trend. So it may be better to sell above the bar, but not as wise to buy below the bar. It might be a 1 bar final flag, but it's an aggressive trade if you're looking to buy. Like I said, sell climax, pause, sell climax, pause, maybe one more sell climax. So right now, probably getting at least a little bit lower prices likely. But if we do get one more sell climax like we did on 7, that might be the last one before we get a deeper pullback and a possible reversal. And look at bar 7. It's the strongest bear bar out of all the bars today. And that's a sign of exhaustion. You have a sign of strength like seeing the biggest and strongest bar in the sell-off, but it comes late in the sell-off. That's a hint that the market is possibly getting exhausted. Bear breakouts are getting bad follow-through. Bars 1 and 2, followed by bar 3, bull bar closing on its high. 4, followed by a doji and an inside bull bar, more bad follow-through. So what do we think the follow-through on 7, after 7, will look like? Probably disappointing, because it's 3 pushes down. It's a parabolic wedge. It can lead to a deeper reversal. We may have to test the bar 7 high, maybe even the bar 5 high, the top of the last sell climax, especially if the follow-through is weak. And we had a couple of weak bars, 8 and 9. So spike and channel, probably going to test the high of bar 8 at a minimum. But the weaker this gets for the bears and the more legs we add to the sell-off, the more likely we'll pull back because we're so far below the moving average. Bears want above average bearishness if they're going to sell this far below the average price. And like I said, after 2, maybe 3, maybe even 4 legs down, traders are getting exhausted. The bears are selling and taking profits, selling, taking profits. And then they get a windfall of profits on bar 7, unexpectedly big. And it's a great opportunity to take profits if you're a bear, especially considering the weak follow-through. And then we got bar 10, bull bar, breaking out above the prior 2 bars, and not necessarily a very strong reversal bar, similar to bar 3, but the difference is that this bar is following a late leg, 1, 2, 3 legs down. And so, like I said, there might be a greater chance of a deeper pullback, maybe to the breakout point, maybe to the highs of these bars. And then we got a bull bar closing on its high. So at this point, we may have been always in long on the close of 10, maybe even during 9, because of context, like I said, far below the average price and starting to go sideways. So we may have to pull back. And so, yes, this is a bear trend, but these are unsustainable sell climaxes. And even though it's a bear trend, we might be in correction mode. So always in short, yes, but if we're in correction mode, meaning we're expecting a pullback, we might be always in long. If we're expecting a pullback in a bear trend, we're expecting higher prices. Then you get consecutive bull bars, 1 closing on its high. So bar 11 might flip the always into long. Reasonable to exit shorts above bar 11. We're probably going at least a little bit higher, going to get a second leg up. And there are magnets above the breakout point, the top of the sell climax. Maybe even a measured move up of these bull bars. And that takes us to the top of the most recent sell climax. So reasons to go higher. And so like I said, bears might exit shorts, bulls can buy. But you're trading against a tight bear channel, so bulls are probably scalping. 12, 13, 14, we're channeling up. This is still a breakout on the 5-minute chart. We're not getting technical pullbacks on the 5-minute, but if we looked at a 1 minute chart or 2 minute chart, some smaller time frame, we would see bar 11 bull breakout followed by a channel 12 through 14. So this is a spike in channel trend. We might go a little higher. This is a lot of consecutive bull bars. The first reversal down will probably be minor. But the danger buying up here is we have a big sell climax. Now maybe a 50% correction. Spike in channel, so we're losing momentum. We're at an area where traders were trapped, the breakout point at the top of the most recent sell climax. So there's reasons to expect resistance up here. So dangerous to be long, but probably buyers below these bars, below the first reversal attempt. 15 traded below 14, first reversal attempt. It got bought, but then look at bar 16. Bigger bull bar than these bull bars, and big tail above. And also, what leg is bar 16? What might be leg 2, might even be leg 3. Maybe it's leg 1, pull back, leg 2, or maybe 1, 2, 3. This might be a breakout of a bull channel. And 3 pushes up. It's a wedge. It's also a nested double top with bars 5 or 6 and bar 16, but also a micro double top with 14 and 16. So a possible second leg trap at the top of a trading range. So at this point, it might be dangerous to be long up here. Better to sell the close of 16 than to buy. And then we got a big bear bar. 17, probably going at least a little bit lower. Bear breakout, follow through. The bears have a target at the bar 9 low, but the pullback was deep enough to disappoint traders below. There were trapped traders below. The bulls want a second leg after this, but because it's against the trend and the breakout wasn't all that strong, they'll wait for a pullback to buy. Maybe they'll buy the bar 9 high, this breakout point. Maybe they'll buy below bar 9, but there's a buy zone down here. The bears who sold down here, disappointed with the depth of the pullback. Maybe they scale in higher, but they also look to buy back shorts down here. That creates support. The breakout grows, we get stronger, probably minor reversal here. Sellers above, sellers on the close of bar 20. And then we get a second leg down, another pullback, and then a third leg down to bar 26, but buyers at a new low. So here, 1, pause, 2, pullback, 3, and a double bottom, and that creates buyers. Now 27, that's a bar that bears might exit above it, strong enough bar for a second leg, support below, but in reality, this trading range down here, there's probably sellers somewhere up here for at least a test of the bar 26 high. And you can see on the very next bar, sellers above, but we pulled back to the 26 high. And the bulls hoping it to break out pullback, but they may have to go more sideways. We still have not had a single bar touch the moving average today. So we continue to a new low. But now we might have 2 or 3 legs down. Maybe 1, 2, 3. Not a great shape for the wedge, but there is support here. So probably buyers below 26. Bear breakout and follow through, but the follow through bar is the only bar breaking out to a new low. So the bears need one more bar, but we're getting a lot of overlap. And then that's a really disappointing bar for the bears, probably buyers below. 33 bull bar, closing on its high, and enough reason for the bears, always in bears, to exit above it. It's a second reversal, and it's nested. Big bear breakout, 1 reversal attempt, another big bear leg, second reversal attempt, and here, 1, 2. Bulls can buy, it's aggressive, but it makes sense to buy above 33 for a test of the top of this trading range, if not even higher, maybe all the way back up here. This kind of pullback does not happen on a bear trend day. This is either a broad bear channel or a trading range. But you don't get 50% pullbacks in strong trends. And maybe this is the trend line. Maybe from here, and the market's getting squeezed. So the bulls want to break the bear trend line, and they did on 36, follow through 37. So probably going at least a little bit higher. That's all the time I have for today. I appreciate everybody for watching. And I'm sorry for the abrupt ending, but I got to call it here. So again, thanks everybody for watching, and I hope everyone has a good weekend.